So hello traders, welcome back to another technical breakdown. So today is on Monday. I'm going to be sharing with you my outlook on the markets. I've received a couple of questions on what is happening in the crypto side of the market. So I'll also share some few things that are going on in the crypto side of the markets, what you should pay attention to, prices where I think markets are going into. I'll also look at the Forex market, the technicals, the markets that I trade. I'll try and share setups that I'm watching, what I expect will happen in the market. This is not investment advice. Take it with a grain of salt, incorporate it with your own analysis, and try and learn something from it rather than look for a signal to use in a setup. So I'll just go directly into doing the chart breakdowns, and I'll be sharing with you what's happening in the Forex and crypto markets. Welcome back to another technical breakdown. So today, or normally every Monday, I'm the one who goes through what is likely to happen in the market. I tackle about 5-6 markets. But today for discount, I'll go through the crypto markets. So I've gotten a couple of people asking me what is currently happening in the crypto market, what I think is going on in the crypto market. Should I be buying the dip? The phrase buying the dip has become so popular that people are asking, is this the right time to buy the dip? I don't think it's the right time to be buying some of these markets. When you look at individual cryptos, yeah, probably there are some good buys. But the broad market, I don't think generally the sell-off is over. I think we still have some downside to come in the market. But I'll just be sharing with you what I expect or anticipate will come into the markets. And then you guys will use that in your own way. So technically, before I go into the technicals, I'll look at the fundamentals. So fundamentals have been quite aggressive. The mantra, or there are two things that, actually three main themes that you should pay attention to. One is what is currently happening with the Feds. We've seen a tightening. So rates are going up for the first time since 2000s. We've seen 50 basis points. We're likely to see another 50 basis points. So they're hiking very aggressively. We've never seen such a dot plot being plotted by the Feds. But the main reason they're hiking is the second theme, which is currently dominating across the globe. Inflation, prices have gone up across the globe. Part of the reason was the too much easy money that came into the markets during the COVID era, the low taxes that were around. We had a lot of money being saved also during that time since you couldn't spend. Now all that money is chasing very few goods, and what you have is demand pull inflation coming into the markets. So we're also trying to fight that inflation by hiking rates, by taking money out of the economy. So that's the second theme you should observe. And the third and final theme that I think is very important is what is going on between Russia and Ukraine. I was actually looking at Europe's reliance on Russia for oil. Europe relies about 55% of their oil, gas and coal come from Russia. So that's a very big percentage. If they sanction that, that's a big blow to Russia. But I think it's even a bigger blow to Europe. I don't think they'll go ahead with that move. As much as they're saying they are likely to do that, I don't see how they'll be able to handle that risk. So as much as people may think Europe will do that either in 6 months or 7 months, I don't see how you'll handle or how you'll bring back about 55% of your energy reliance from another country in less than 6 months. If they can do that, they'll have pulled one of the greatest miracles of invention, innovation, and being fast in doing things ever done. But I don't think that is likely to happen, especially from Europe. If we're talking about China and US, maybe yes, but Europe, I don't see it coming along. That's an opinion though. It's not something factual. It's an opinion which has been brought about by the little research I've done on their reliance on European energy. So I'll go directly to the chart breakdowns. I'll first look at cryptos. I'll first look at currencies, commodities, and then I'll jump into the crypto section and share with you what I think is likely to happen on that section. So let me just first share my screen. I'm hoping you can see my screen that is being shared. Yep. So I'm sharing my screen. Currently, my chart is on Euro Yen, but I'll start off with gold. So gold has been selling off. Last week, we saw a collapse from about 1883 to 1800. That was well anticipated. If you are just doing your analysis, if you are looking at markets from a broad perspective, for example, if you've been following my insight on gold, I was actually anticipating that collapse. I think on Friday I did the analysis just pointing out that we were likely to visit the 1800 level. On Monday, I think on Tuesday we opened at around 1883, 1885. and we just saw a collapse from that level all the way to about 1811 when we closed the week. And currently today gold is down about 0.78 in the early sessions of the day, trading at 1800. So what do I think of this commodity? What do I think will happen next? First things first, 1800 is a crucial level. If we just start off from the weekly chart, you can see clearly this is the central pivot. It's a fair value area for the year, and yes, we are trading below it. Do I think we have a chance of going lower? Definitely we could go lower. I think before the end of this year, as we go into Q4, as rates keep on going higher, we could easily see gold melt down to 1650, 1600, probably even 1500. I think the era of gold prices being up is behind us, but some risks could come in. For example, if Russia-Ukraine develops, goes further than Russia and Ukraine territories, gold could have to price in some things. So there's a risk there. Obviously, things could change. And when things change, we also change our outlook. But for now, I don't see any upside coming into this market. I think we will just see the sell-off going on to 1700, 1650, probably even 1600. So that's my outlook on gold from the weekly chart. We're currently at 1800 though. 1800 is a crucial level. So if you just look at this leg, you can see we've come all the way from about the 1980s, 1970s level to trade as low as 1800, about 2000 pip collapse. I'm looking for a bounce from this level. There is a very high chance you'll see a bounce from 1800. So at this point, I don't think I'm more of a seller as much as I'm expecting a downward collapse. I don't think we will just go lower. I think there's a high chance we'll see a pullback, probably to 1850, 1900. Those are the levels I'm watching. 1850, 1900. I don't think we'll breach 1900 going higher, but 1850, 1900 could be easily attained. If I go down to the 4-hour time frame, you can see currently we have a magnet trade. So if I'm going into buying this one, I think my first target will just come in quite conservative at the 1830 level. 1831 from 1800, that's about 300 pips. Depending on where you put your stop loss, you'll have your risk reward calibrated for you. If we break past 1830, I think we could easily see 1850, 1875 if we get a very aggressive move to the upside. But I think 1830 is a good level to start with. If we see a good close below 1800, a good one, I think we will see 1775 and 1750 before the end of this week. So those are the two probabilities I'm watching. Currently, you can see we are at 1800. Looks like we're selling off. London has just opened. We are now into London. But this is the first hour of trading. There's a lot that could happen. I'm expecting a move back up above 1800, let's say in the next 2 hours. As we go into New York, probably some pumping in. I think I'm 70% bullish, about 30% bearish. We've seen an extreme sell-off. I think we could see a pullback at least higher to 1830 moving forward. Next, I look at US oil. Oil remaining quite strong, quite elevated. Despite the high interest rates, oil has remained quite high, trading as high as 110 currently. All other markets have sold off, lost significant percentages, but oil has remained quite strong. Part of the reason is the Russia-Ukraine crisis and the risk of a European sanctioning of the Russian oil. If that happens, obviously oil prices will still remain high. But I think fundamentally, other than that, oil should be significantly lower from where it currently is. I think we should be trading as low as 80, 85 from where we are currently are. I think the move to the upside, still there's some potential, yes, from these risks. But I think the move to the upside is somehow behind us. You can see we moved lower last week, but then we went back all the way to $110 a barrel. So if we can close above $110 a barrel this week, we could be approaching $120 a barrel. It could keep moving higher, but I think there's a high chance we will sell off from that level. If I go back to the daily chart, you can see this was a nice bounce. So we had the first bounce, second bounce, third bounce, taking us back all the way to about the R2 level, 110, 112. But I think the level I'm watching is 115. Will we break past 115? If we break past 115, then we could easily visit 120. But if we remain below 115 and we start selling off, I'll be looking for a move back to $100 a barrel, and probably after a break of $100 a barrel, probably $90 a barrel. I think what is likely to happen is oil prices could trade sideways for quite some time in these high ranges, probably 100, 120, 110. It will stay there for quite some time as these risks remain. Then as things become more clear, as clarity comes into the market, we're likely to see lower prices. But for now, maybe oil prices will remain quite high. If you come back to the 4-hour chart, you can see we are at 110. What do I think? I think we will see a move back to 105. Probably from 105, we could see a bounce back to 115. If we break past 105 and start moving lower, maybe we'll see 100. If we get support at 105, which is what I think is likely to happen, then I think 115 could be easily attained from 105. But there isn't much of a pattern to dictate a one-way bet for me on this market. So I'm out of this one for now. But I think we could see 105, and if we don't get good support at the level, 100. If we get good support, maybe 115 is the next level that we'll be watching. Next, I'm looking at the Dow. So the Dow, 30 of the best American companies weighted together. If I look at it from a weekly perspective, it's been selling off quite aggressively. I'm looking for a move to 30,000, so I think there's still some downside potential on this one. When you're still trading at 35,000, I was calling for a move down to 30,000. You can see it's come in handy. We've gotten a collapse from 35,000, and now we're approaching at least 30,000. We're currently at 32,000. Do I think we're still likely to go down? Yes. But am I taking a position currently? No. Why? I expect a pullback. So if I just come back to this market, you can see we had a move to the downside, a pullback, a move to the downside, another pullback. And then you got an official move to the downside, taking us all the way to around the S3 level, which is 31,200 level. We then got a bounce and a move lower to about 32,000. So I still think we have some upside into this market. I think the correction is not done yet. We could easily visit 33,000, which is just 1,000 ticks from where we currently are. If I go back to the 4-hour chart, that 33,000 coincides with this third bounce of the line. So I'm looking for a move back to 33,000 before the next leg to the downside, which will now ultimately take us to 30,000. Currently, we are at 32,000, rejecting the level. You can see clearly towards New York, I think some momentum will come into the market. We'll see 32.5 and probably 33,000 as we move higher. So that's my outlook on the Dow. Next, I look at GBP USD. So GBP USD has been selling off now aggressively as the dollar gets stronger, obviously. The pound has to bring in some weakness, so the pound has moved lower for quite some time now. I was looking for a move to 1.20. I think that's ultimately the level we'll hit. On Friday, I was looking for 1.20. I still think we still have that downside potential to get to 1.20. I think that's where we could see some demand come into the market, some move higher. So you can see there's a lot that calls for this level, 1.20. However, if we get a close above the 1.225 level today, a good daily close above this level, then I think we could tap into 1.25 and then ultimately 1.275, a slight pullback. You can see we've gotten a sell-off all the way from about 1.36 to trade as low as 1.225. But if the momentum still remains to the downside, I think we could easily tap into 1.20. If I go down to the 4-hour chart, so if you just look at it from the 4-hour chart perspective, last week I was looking for this sell-off from 1.2375. We got it. I was looking for it to come back to 1.2125. Never got to the level. We've now gotten a pullback to this level, bringing in sort of a third trendline bounce. So if this momentum remains, I don't think there's I think this is a trade actually I'm looking forward to execute. So I'm looking for this market to come back to 1.20. I still think that's the major level of support that I'd be looking for in this market. So I'm looking for a move to that level. My risk reward will ultimately look like that. So that's the trade that I'm looking for. I think that's a good trade, at least for me. But we still need to see markets remain below 1.225. If markets start closing above 1.225, I think the idea is nullified and I'll come out with a small loss, looking for the markets to just keep on moving higher. Next, I look at Euro Yen. So Euro Yen went lower significantly last week. I was looking for that move to the downside. If I just go back to the daily chart, we had seen a very elevated move to the upside from about 125 to trade as high as 140. We rejected 140, sold off to 135, retested 137.5, and now it looks like we visited 132.5. Now we're back to 135. The question is, will we close above 135 level? If I just go back to the 4-hour chart, you can see 135 remains a very crucial level. I think there's a high chance we'll reject this level and the sell-off will just continue. We'll see a move back to probably 132.5. If you break past 132.5, then I'll be looking at 131.25 and ultimately I think 130 on euro yen. So that's my outlook on euro yen. Moving forward, I think I'll look at the dollar. So the dollar, just as an index, getting very, very strong. The dollar has gotten stronger relative to all other currencies. Part of the reason is the Feds have the most aggressive rate hikes priced into the market. Currently, we're trading at 104. What do I think? I think there's a high chance we'll tap into 105.5. These are two level. I think that's a level that I'd be watching. But we could get a correction back to 103, 104 before this move to 105.5. If we close below this level, then probably we could even sink in lower to 101. But I think there's a high chance we'll tap into 105 before going down lower all the way to 101. On the 4-hour time frame, currently we're moving closer to the fair value area. So I'm looking for a move coming from this level, 104.2, to take us all the way to about 105.9, 106, 105.5 comes in at the R2 level. That's the level I'm watching. I think I'm looking for the round number 105, 105.5. That's what I think ultimately markets will reject before they start selling off. Next, I'll look at bond yields. So this is 10-year bond yields for the US. Anytime you hear a flattened yield curve or things like an inverted yield curve, this is what we normally talk about. This is a reflection of interest rates. So this is what tells you how high rates are likely to go. When you see bond yields being so high, you can see we've gotten a very, very aggressive move. This means rates are likely to keep on moving higher. You can see we're struggling so much to go lower. You can see the sort of corrections we're getting. I still think we're likely to go higher. I think yields are likely to tap into 3.3, 3.5. So we still have a move to the upside, and that's why you can see a very, very weak gold market, very, very weak commodities. They have to price in higher rates. Higher rates mean higher currency prices, and you can see the dollar being very, very aggressive. So that's my outlook on the currencies. I think I've done a broad one. I've shared with you everything that I have from that perspective. Next, I'll come into the cryptos. I think we've seen some aggressive moves to the downside on these markets, the likes of Bitcoin, Ethereum, Ripple. And these markets work in the same way. They just work differently in the form of volatility. But the factors that move market up and down are still the same. It's the factors of supply and demand, just like any other market. And I think currently what's happening is there is a lot of easy money being taken out. So there are very many people who are just putting money here without understanding the subject. And most of those people right now are panicking, and we're likely to see these prices go way, way lower. Personally, I think Bitcoin has a chance of trading below 10,000. At 20,000, that's certain. Below 10,000, about a 60% chance of that happening, bringing us back all the way to these levels. Wouldn't be surprised by that. I don't think we'll just see a move to the downside and then a move to the upside that fast. What I think is likely to happen is we're likely to see prices remain low for quite some time, probably another year or two, because there isn't any easy money coming back into this market anytime soon. So those pumps that many people are accepting, pump and dump, I don't think we'll see that. What we're likely to see is some pullbacks on the way to the downside. Probably we'll visit 20, we'll then see 40, then we'll see another move back again to 12. So we'll see pullbacks, yes. I don't think there's a market that goes down in a straight leg. But eventually, I think in the long run, probably as we come to the end of this year and early next year, I think Bitcoin will trade as low as below 20,000. That one, I think there's a high chance that will happen. If I come back down to the daily chart, currently what's happening is we are currently at 30,000. Yes, we are struggling to go below the level. I'm likely to see a pullback, yes, to 40,000. You could see a pullback to 40,000 from the level. So if I was trading it, I wouldn't be selling at this point, obviously. But as much as I'd be buying at this point, I don't think I'd be buying with a target of 60,000 or 100,000. If I buy with a target of 35, 40,000, makes sense. But if you buy with a target of 90, 100,000, probably your horizon is too long, or you're just not buying to make some money right now or in the next few weeks. So that's my outlook on Bitcoin. I think we still have some prices down, but for now there's a pullback. Ripple, which is one of our favorite coins here at Financial Hub, we really like the white paper for this coin, is also trading quite low. We are now at 35. We had some positions here which we came out at about 120. So you can see if we held on to these positions, we'd have lost about 4 times the money we had made. So currently we've gotten some good bargains. I think this one is a good bargain for me. I'd be buying into this one if I was looking at individual counters. Yes, we could go down to as low as 20. but I think at 40 that's a good buy. At 35, 40 that's a good buy long term. Ethereum at 2,000, coming back all the way from about 4,400. This remains to be one of the strongest markets. If you look at it from a broad perspective, you'll observe that most markets have been moving quite low, but this market has remained quite elevated despite those other markets remaining quite weak. That tells you there's a lot of money being pumped into this coin. I think if you're buying long term, this is what you should be holding, because if there's a bull market, the reverse will happen. It's likely to move very aggressively relative to other coins. Currently we are 2,000. Will we break below it? Yes, most likely. How far lower do I expect it to go? Probably 1,400, 1,500. If it's to the extreme, probably we'll visit 1,000. With some aggressive rate hikes coming in, I don't think these markets will just remain where they are. They have priced in some rate hikes, but they have not priced in all the rate hikes that are likely to come. The risks of a recession coming in the US, in Europe, those things are quite aggressive, and markets will really struggle in such environments. I don't think the crypto market is exempted from struggling during such environments. I think we're still likely to see a move lower. So next I look at Cardano, again one of the main coins. The same concept used in Ethereum is used here. Some slight differences. You can read their white paper to understand more. And it's traded as low as 40, coming back from around 2.8. It's now at 0.56. So it's lost quite some percentages. When you're looking for corrections in some of these markets, especially the crypto markets, extrapolate downwards at least 70-80% corrections. You can use your Fibonacci. So for example, if you look at Bitcoin coming from 60,000, an 80% correction would bring it somewhere around 15,000. Yeah, 15,000 to 20,000. If you look at Ethereum, it would bring it to about 1,800. If you look at a coin like Ripple, we are now in those territories. Solana is also a good bet for me. It's now at around 53, coming from around 240. I think there's a high chance we'll visit 40, 25. We actually visited 40. When I told people it will go to 40, some people thought it couldn't happen, but now we're at 40. So I think some of them are good to buy, some of them not really ripe. In the broad sense, I think markets still have some sell-offs to take place, but you still have some bargains that you can start collecting. You can start buying in from some of these prices. You'll make some tiny coins on some pullbacks, but for us, we like buying them and holding them long term. So if we're buying, we're looking at a horizon of probably a year or two so that we can make money. So I think I'll stop there. If there's a question, I'll answer. If there's no question, I think I'll stop there, and I'll catch you guys in the next one that we'll be doing probably next week on Monday again, because on Wednesday, Caleb will be taking you through, and on Friday, Lawi will also be taking you through. So Martin is asking something. Let me just unmute you to ask your question. Okay, you can ask your question.
Hello, niaje?
Poa sana.
Nilikuwa nauliza unaweza niangalilie hiyo ya USD card. Upitie tu tuone vile iko.
Okay, USD against the Canadian dollar. So I don't trade that pair. Caleb is the one who trades that pair, and he shares his analysis via his channel on our Discord. But I'll just give you a brief overview of what I think will happen there in relation to what is happening in the dollar and what is happening on oil. But I may not give you quite insightful perspective because I don't have a feel for this market. I've not traded it long enough to develop a feel for what is likely to happen. But let's just see what's happening here. So if you just look at it, let's say from a weekly perspective, you can see clearly the market sold off, first of all, from about 2020 when we had a very, very weak dollar. The market sold off aggressively all the way to May 2021, and then we started having a strong dollar. It's moved higher, but you can see it's not trending to the upside unlike any other markets or to the downside. So what is really happening here is you're getting sort of a sideways move. Why? Because oil prices are high and the dollar is high. The Canadian dollar is likely affected by oil prices, and the dollar is affected by what is happening on the rates side. So we're more in a sideways movement. So currently we're trading at 1.295 after rejecting the 1.3 level, which I think is a critical level for this market. We've started moving lower. If we keep on below the 1.3 level and we break past this level, I think there's a high chance we'll visit the 1.275 level. If we break past 1.3, maybe we'll visit the 1.32 level from a daily perspective. If I go down to the 4-hour chart, I think what is happening here, I've seen a pattern which I've spotted, a familiar pattern. So yes, we have this sort of a 3-drive pattern. So if that bounce holds, maybe we'll see a move higher. But if that bounce is taken out, then probably we'll see a move lower. So I think that's why I'll stop. Maybe if this bounce gets held up, we could see a move higher. If it's broken, we could see a move to the downside. So I think I'll stop there. If there's any other question, I'll answer. If there's no question, I think I'll see you next time. So someone is asking, what is your opinion on a coin like Luna crashing in just a few days? So if you understand some of these markets, not actually some, but most of these markets are just speculation. Like, there isn't any technological advancement that has been invented. It's just a coin that was hyped and moved higher, way higher. So I've not done research on Luna, but I think ultimately 95% of cryptos will go down. They'll go down to the west because they don't have any utility. No one cares about what they are doing. They don't have anything that they're contributing to society. So they're just up because of speculation. But when that speculation bubble ends, things will go down significantly. If you go back, for example, to the 1999 period when you had the tech bubble, a company like Amazon, which was doing something amazing, had amazing cash flows, was growing at a very fast rate, still went down when the bubble burst from about to $40 per share to trade as low as $6 a share. At the end of the .com bubble, after it burst, we were trading at about $6 a share. So if something that had utility went down that much, I don't know what will happen to something that doesn't have utility. So unless I look into the white paper of Luna, what they're doing, why it crashed, then I'll come up with clear answers. But for now, I can only tell you it sold off aggressively because it was the weakest market relative to other cryptos. People maybe ran away very fast, a lot of flight. Just the factors of supply and demand. I don't think there was any specific reason for people shorting it. I think it was just factors of supply and demand. When it starts going down and everyone is rushing, we get more short sellers, then it's likely to just keep on moving lower and go down completely. So yes guys, that marks the end of my analysis. So I've shared with you guys my insights on some of the markets that we normally look at. If you're interested in learning more about the crypto markets, the Forex market, the global stock market, the financial markets, you can reach out to us through our social media platforms. You can engage with our content. You can buy our book. We have courses where we take people through how to handle the financial markets. And if you're interested in opening a brokerage account, if you're interested in opening a trading account, you can visit Pepperstone. We'll give the links below to open an account, and you can start trading with Pepperstone. They have the lowest spreads, good customer service, M-Pesa is enabled for withdrawals, so you won't struggle with anything. They just need 2 documents for you to open an account, your KRA PIN and your ID card, and you have your account set up and running in less than 24 hours. So that's it. We'll catch you guys in the next one. Peace.